The third day of a very volatile week on the New York Stock Exchange floor. Monday was a bad day with the Dow Jones shedding more than 500 points. Tuesday, a strong rally and a little bit of optimism crept into the floor here. But Wednesday closed another bloodletting session. The Dow Jones again more than 500 points down. A lot of rumours and speculation and a lot of eyes on what's happening in Europe and the Eurozone crisis there. Let's get some analysis on what happened today with the trader Kenny Porcari. What happened today?
We just had some really, the market reacted to the negative news coming out of London this morning over the French banks, over the exposure to the European debt crisis, and that knocked us right off the cover. Right from the very beginning, we were weaker, we opened weaker, we tried to stabilize, and then as the day went on, you have to understand, we've had a lot of damage, so as the day went on, the market, as much as the market tried to rally, there were sellers there. There's nervousness right under the surface. You can feel it. The market is trading on headlines. It's not trading fundamentally, and so you can watch every single headline and you can see what the market's going to do. It's perceived as negative, they sell the market. Perceived as positive, they try to rally it back, but the sellers are sitting right there.
Wednesday was about the banks. Why?
Well, because it started with the French banks, right? It started with the exposure to Europe, to the European sovereign debt crisis, which quite honestly is not a new story. That's been out there. So all that tells you is the market's very nervous. We know it, we've heard it, we've talked about it, but they bring it up again today and the market is nervous. And then it just flowed over into, once Europe closed, then it flowed over into the U.S. banks. Their exposure to the housing crisis, the mortgage crisis, the foreclosure crisis, AIG suing Bank of America. So they just rehashed the whole stories again, and net as the day wore on, they just sold the market off. It just tells you that people are raising cash, but you have to understand, for every seller there's a buyer. So as much as people are raising cash, there are other people that are looking at this as an opportunity.
All right, Kenny, thank you. There's more proof there about how incredibly intertwined the global markets are and the banks. Another day of volatility, dramatic swings, and not a good way to end the trading session. 2 more days to the working week. It's been one of the worst weeks since December 2008, probably at the height of the last financial crisis. It is not a good way to be ending the week, and it looks like there's more volatility ahead.